Are you tired of living paycheck to paycheck, or have you ever wondered why your savings are stuck in a never-ending limbo? If you want to learn how to become rich and successful like Warren Buffett, if you answered yes, then you need to watch this video until the end, because in today's video, we are going to reveal 10 money habits that are keeping you broke and poor, and how to avoid them. Warren Buffett is not only a billionaire, but also a master of personal finance. He has a simple and effective philosophy that anyone can follow to achieve financial freedom and happiness. But before we jump into the gold line of insights, hit that like button, smash subscribe, and ring that notification bell so you never miss out on the financial wisdom we're dropping every week. Your wallet will thank you later. All right, let's get started. Here are the 10 money habits that are keeping you broke and poor, according to Warren Buffett. The number one on our list is a habit you've heard a million times: living above your means. Living above your means often stems from unchecked spending habits. Take a closer look at your monthly expenses, distinguishing between necessities and luxuries. Creating a budget is a powerful tool to gain control over your finances. Track your income and allocate funds strategically, ensuring that you prioritize saving and investing. Consider adopting a minimalist mindset, focusing on experiences over material possessions. The second habit Warren Buffett emphasizes is to think long-term. Warren Buffett is a long-term thinker, and he doesn't care about short-term fluctuations, trends, or fads. He focuses on the big picture and the long-term value of his investments. He once said, "Someone's sitting in the shade today because someone planted a tree a long time ago." He also said, "Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Thinking long-term is a crucial habit for anyone who wants to achieve lasting success, especially in investing. The third habit Warren Buffett emphasizes is to read, study, and learn. Warren Buffett is a voracious reader, and he spends about 80% of his day reading. He reads books, newspapers, magazines, reports, and anything else that can help him improve his knowledge and skills. Reading, studying, and learning are essential habits for anyone who wants to achieve success in any field, especially in investing. Warren Buffett is a lifelong learner, and he never stops improving himself. He once said, "The most important investment you can make is in yourself." He also said, "Risk comes from not knowing what you're doing." The number fourth habit on our list is neglecting investments. Investing doesn't have to be complex, and you don't need a finance degree to get started. Whether it's stocks, bonds, or real estate, we'll break down the basics of investing and provide practical tips for beginners. Discover how even a modest investment can snowball into a significant financial portfolio. Number fifth habit Warren Buffett emphasized is of creating no budget. Budget is a financial plan that lists your income and expenses. It helps you to track your cash flow, control your spending, and achieve your financial goals. Without a budget, you may not know where your money is going, how much you can save, or how to allocate your resources. Warren Buffett recommends to create a realistic budget and stick to it. On number 6 is the habit of keeping up with the Joneses. Keeping up with the Joneses is a social phenomenon where people compare themselves to others and try to match or exceed their lifestyle, possessions, or achievements. This can lead to overspending, envy, and dissatisfaction. Warren Buffett warns to avoid this trap and focus on your own happiness and needs. Number 7 habit that poor people make is of paying high taxes. Taxes are a mandatory contribution that you have to pay to the government based on your income, property, or consumption. They can take a significant chunk of your earnings and reduce your disposable income. Warren Buffett advises to minimize your tax liability by taking advantage of tax deductions, credits, and shelters. Number 8 habit that poor people make is none other than not diversifying their income. Diversification is not just a buzzword, it's a strategic approach to managing risk and optimizing returns. Picture your investment portfolio as a garden. Instead of planting all your seeds in one type of soil, you spread them across various plots, each with its unique qualities. In finance, these plots are analogous to different asset classes: stocks, bonds, real estate, commodities, and more. The legendary Warren Buffett has repeatedly emphasized the importance of not putting all your eggs in one basket. Number 9th habit that poor people make is lack of emergency savings. Life is an unpredictable journey, full of twists and turns. Just as you wouldn't embark on an adventure without a safety net, managing your finances without emergency savings is akin to navigating stormy seas without a lifeboat. Having an emergency fund provides a financial cushion, allowing you to navigate these challenges without resorting to high-interest loans or accumulating debt. Buffett is known for his emphasis on managing risk. Lack of emergency savings exposes individuals to financial risks when unexpected events occur. Last but not least, the number 10 habit that poor people often make is thinking short-term. Warren Buffett often emphasizes the importance of thinking long-term rather than short-term. Buffett is known for his value investing approach, which involves buying and holding investments for the long term. Buffett believes in understanding the fundamentals of the businesses in which he invests and holding on to those investments for the long term. He discourages short-term speculation or reacting to market fluctuations. His approach involves finding businesses with durable competitive advantages and holding on to them through market ups and downs. One of Buffett's famous quotes that reflects his emphasis on long-term thinking is that the stock market is designed to transfer money from the active to the patient. In essence, Buffett encourages investors to focus on the long-term prospects of the businesses they invest in rather than getting swayed by short-term market volatility or trends. He believes that successful investing requires patience, discipline, and a commitment to the long-term growth and success of quality businesses. And that wraps up our today's video. Remember, it's not just about what you make, but how you manage it. If you enjoyed diving into the mindset of a billionaire, hit that like button like you're hitting your financial goals and subscribe to our channel for more interesting videos like this. Remember, the journey to wealth begins with a single step. Take that step today, and who knows, maybe one day we'll be sharing your success story.